One thing that works my soul is like when people are just transferring money from here to there and here and Venmo. And so now, like, we are looking at, because people can pay bills through Venmo, all of your deposits, all of your withdrawals, everything's being scrutinized because
Uh,
we need to see what's happening and, like, what are you doing? What is this? Are you, so your bank statements get looked at, all your deposits, all your withdrawals, all the deductions on your pay stubs, your tax returns. So you just need to make sure that you're completely transparent up front so there's no surprises at the end.
You are now listening to the Your First Steps podcast. It's great to talk about $1 million dreams, but where do we start? How do we get there? Listen up as you hear directly from real estate industry leaders on how they reach success in their fields. And most importantly, what were their first steps? Let's get this party started. Here's your host, Eli the Real Estate Guy.
Hey, how's it going, guys? Thank y'all so much for tuning in to another episode of the Your First Steps podcast. We have a very, very special guest today. She is a mother, she is a real estate investor, and she is a underwriter. All right, and this person, if you guys have followed us on, if you followed me on Clubhouse, then you would have seen this person in an accountability call. And for you guys who have not seen an accountability call, you have no idea what I'm talking about, so that's fine. But today we're going to be speaking with Takia Brown. Takia, how you doing today?
I am well. How are you?
I am doing all right. So thank you so much for coming on. And just to kind of let everybody know how we met. So it started off on Clubhouse. And, in the mornings, we'll have different calls that we'll do, holding each other accountable for different goals that we're working on. And at one point on stage, it was probably like 20 or some of us on there. And then as the years went on, it became a smaller group, but a tighter group that really kept folks accountable. But during that time, being an underwriter, you are always able to provide a lot of insight from that aspect, from people looking to, get mortgages and things of that nature. But for the folks who don't know you, go ahead and introduce yourself to the people.
Hi, I am Takia Brown, and I'm so happy, Eli, that you have me on here. So I hold a lot of titles, right? So I'm first and most importantly, a mother of a teenage daughter, entrepreneur, and I'm also a mortgage underwriter. I've done mortgage brokering, processing. I've done it all. I've been in the real estate game for about over 20 years. And so I'm also an investor. And so our Clubhouse accountability group was life changing for me. You guys, our group was awesome.
Yeah,
And so that's
definitely.
how we became acquainted. And
Awesome.
so here we are.
Awesome. Good deal. All right.
Yeah.
So now, of course, we'll get into the underwriting and everything else that you have going on. But a lot of
Hmm.
times, whenever it comes to a professional or anyone that gets into a career, I usually find that there's a connection between their childhood and what they end up becoming. So take us back to when you were a kid, and what was it like growing up in your household?
It's a lot. That's a lot. So to shorten it, so my dad was in the military, so we had a very strict household.
Mhm.
And so very strict. And my mom was a huge nurturer. Rest in peace, mom. And she was just amazing. So between like the disciplinary, father, nurturing mother, here I am. And I think it was a perfect, happy medium between the discipline and the nurturing, um, that created who I am. My dad was very, my dad informed me about saving, credit, just being like financially responsible. And so I think my dad instilling those things into me is what helped me be very cognizant of my credit, of just being financially responsible. And then my mom was always she helped build my confidence. And so to me, it was a perfect mix of the two of them.
Gotcha. Good deal.
So
So,
yeah,
go ahead. Yeah. So as he
no,
was speaking to you about like, credit and everything and on the finance side, was there an introduction to, finance to where it was that turning point of like, oh, this is something I may want to do as a career?
no, that's interesting you say that. So my dad, he believes in not working for anyone. He's been an entrepreneur since I've been born. And so he has always, um, at one point when I was, making a lot of money, it's like, honestly, that was the thing, but
Yeah.
it's
Yeah.
like, what's my other option? He didn't
Mm,
teach me entrepreneurship, but
mhm,
he's always been an entrepreneur. So he didn't really school me on entrepreneurship, but he did push it and encourage it. But
mhm,
by the time I was 26, I had a child. So entrepreneurship just wasn't for me because I wanted to focus on stability and
mhm.
just, knowing. And, I guess maybe I just didn't, um, I think that if there was some sort of support system that pushed me into entrepreneurship, that's where I would be. But
Right.
I'm choosing, I have a 9 to 5. I know a lot in the community, and podcasts promote self-employment and entrepreneurship, which I'm
Mhm,
teaching my daughter that, and that's the
mhm.
route that she's going for now. But I decided to work because I knew it wasn't guaranteed income, but it was more reliable than what I could do by myself as an entrepreneur. So
Right.
I never ventured off into being full-time entrepreneurship. So I was like, what other way can I have other forms of income? And then I chose investing in stocks and real estate. And
Gotcha.
it's been good.
Awesome. So you said something else very interesting, and I feel like it's
Hmm.
important for a lot of people to really take that and understand that not everyone should just basically burn the boats. I'm an entrepreneur. I'm doing my own thing without getting 9 to 5. I'm never working for a person. There's value in actually having a job, right? And
It
my
is. Yeah.
yeah. So it's like something that so my wife and I, Whitney, we've been going to, we went to this one training. It's called Multifamily Mindset. It's a group of folks
Hmm.
that specialize in investing in apartments. And
Hmm.
one of the things that I realized whenever it came to going to an event like that, or speaking with other folks that raise capital, there's part the main source that you go to usually are folks who have jobs when it comes to raising capital.
Right.
And yes, you'll find folks that are entrepreneurs. They have tons of money, say where or whatever. But a lot of the folks that you're targeting are folks that have 401ks that aren't growing as fast as they would like. And these individuals that you're saying, hey, you should be an entrepreneur. It's like, hey, this person is making 6 figures. They have a 401k that they're loading up every year. They have a Roth, they have savings, they have all this money. Now, where I would say the disconnect is sometimes, and where I feel like whenever people feel like the grass is greener on the other side, is somebody who's solely an entrepreneur. They'll be like, I would rather be broke than have somebody be my boss. But I do
Hmm.
understand sometimes there's that appeal of somebody that's on a 9 to 5 to be like, man, it sure would be nice to just have control over my complete schedule without ever having to come in. So I guess where would you say that balance between investing and having a job, like where do you find that balance, and what do you do to make sure that you're making your money make money?
That's a great question. I think so for me, with my personality, like type A, very assertive, I think entrepreneurship and not being employed by somebody is probably what's best for me. But this is my one shot at being a mom, having my daughter. And my personal struggles as an individual is discipline and consistency.
Uh-huh.
So I just felt like my work ethic is on 1,000. My work ethic is amazing. I'm very educated, but I'm not very disciplined. So I just never really trusted myself. And I feel like, with the right people in my life, I probably could have, but I chose to work. And it hasn't always been great, but I think that when you decide, like, I'm not going to settle for less. I'm not going to be in my case, this stereotypical, like, single parent that's going to, not have anything. So my goal once I had my daughter was like, oh, I got to go crazy. I have to make sure I provide the life for her. Since she's been 2 years old, we've been going on vacation 2 and 3 times a year.
Nice.
I've provided she's very, well-rounded, and I just made sure that I try to provide a life for her that was stable. So stability to me was working. That is very debatable. You know what I mean? Like, people will have their arguments like, no, stability is being self-employed. But at the time, I didn't have a huge support system. And my mom passed away when my daughter was 5. And so I didn't have a huge support system of, like, babysitters. I was trying to be a realtor when I got pregnant. And so I was like, well, there goes that, because I'm not going to just leave my daughter and be out here trying to sell houses. So did mortgage brokering with a friend of mine. It was commission only, and I was doing well, but I'm not a salesperson. I mean, I think the charisma that comes with it, I have, but I don't think the hustle and the trying to sell people on things that they may not want. Back then, subprime was really popular, so it was easy to make a lot of money in
Right.
sales. So I don't think my success at sales was because I was a great salesperson. I think it's because it was subprime and people were desperate.
Gotcha.
So I just think you have to figure out what works for you, whether it's working and creating a stable income. Like, I have a 401k, I have life insurance, I have health insurance, I have all the things needed to raise a child. So I don't want people to get caught up in entrepreneurship is the way, because it's not always the way. I think for me, now that my daughter is moving on and graduating, I think self-employment looks more desirable because I won't have a small child in the household. But raising her and just, I've always had jobs that were performance based, and my work ethic is amazing, and I'm good at most things that I give myself 100. If I give 110%, it's going to get done. So because I have performance-based jobs, my incentives are, it provides a great lifestyle for us. And I didn't want to mess that up with entrepreneurship. So investing is what I decided to do.
Gotcha.
Yeah.
Cool. So now the main reason for having the 9 to 5 was because of your child, but now that she's getting older, you're considering doing the self-employment thing. So what does that look like for you if you were to go that route?
That's actually what I'm in the process of trying to figure out. So I'm very educated in real estate. I've done FHA, VA, conventional, portfolio, new construction. There's I'm really educated in that space in my life in real estate. I'm also I think my gift in parenting is a parent. And I also feel like just my lifestyle that I've created for my daughter and I feel like I could capitalize off of that. And I'm very private, so I don't post a lot on social media. My Facebook is private. I have less than 200. I have like 150 followers, or,
Right.
friends on Facebook by
Yeah.
choice. And then Instagram is public. So I wasn't really sure how to tap into entrepreneurship, because I feel like there's a lot of misinformation out there. So my goal was to just try to give correct information, and also for normal, not normal, maybe not say normal, but just for everyday working people like me as a parent trying to provide a lifestyle, is it makes more sense than people popping out here in like Porsches and Lamborghinis and stunting for Instagram.
Gotcha.
I'm like, I just want to show how it's done modestly because that's not,
Gotcha.
So
Gotcha.
that's
I feel
always
you.
been
I
my
feel you.
goal. I'm just not really, I haven't gotten into the content creation part of it, but that's what I would like to do is educate people on first time home ownership,
Uh-huh.
credit, business credit, personal credit, and then just go from there because I feel like that's my strength.
Now, I'll tell you what, I mean, being that you're knowledgeable and all this stuff, and I
Hmm.
mean, we heard you go on the morning calls. What you could do, you have your daughter that's doing an amazing job with her content. She could just be
Right.
your director and just tell you, like, all right, here we go. We got to set up the camera and you just let it rip. So maybe that's something that y'all could talk about. And she could just give you like a format or a formula. And as she goes through college, you got the formula and you could just let it rip. Because underwriting is something that it's like you're like the mysterious person that nobody ever sees, right? You're the person that's in the back, that's doing the numbers, that's letting people know,
Right.
like, hey, it's either happening or not happening. So kind
Right.
of going into that part. So I'm assuming you started off with the brokerage processing, and then it went into underwriting, or was that always underwriting from the beginning of when you got into the finance
No,
space?
honestly, to be
Mhm.
super, super honest, when I got into the mortgage industry, I was 22 years old
Mhm.
and I was an administrative assistant.
Mhm.
I went from being a manager at a call center to
Mhm.
being an administrative assistant.
Mhm.
And my personality type, I'm not administrative assistant like
Mhm.
material. Like you're not going
Oh my
but that's
gosh.
what I did.
Right,
So you
right.
sometimes, and there's a lesson in that because
Mhm.
sometimes you have to take a couple steps backwards to take a couple steps forward.
Exactly.
So I was a manager and I went from being a manager where I was to an administrative assistant at a mortgage
Mhm.
company.
Mhm.
So I learned what I needed to learn and I became a mortgage processor. Then, as I became a processor, and then just through the years, processing, brokering, processing manager, and underwriter. And so management was never really super desirable to me because back then you needed to have a BlackBerry and people could contact you all hours. And
Mhm.
I'm like, once I log off,
Right,
it's
I'm out of here.
my daughter.
Yeah.
Yeah.
Mhm.
So I never really wanted to dip into management. And because I didn't want to be set on a salary, like, no, you need to, if I'm working overtime, you need to pay me overtime. If I'm doing all this work, I need incentives. So
Right.
management is kind of like a cap. So I just was strategic about that, but I didn't, mortgage brokering was sales, and then I did processing and underwriting.
Gotcha. Okay, cool. So
Hmm.
so with the underwriting aspect, I know so that was your path of when you got into that. So
Right.
what made you want to stay as a underwriter, and like what appeals you to actually doing this process when it comes to this function?
Um, I think because one, the money's good,
Gotcha.
it's a
Right.
because I do so many products and I do a lot, it's definitely a six-figure income, which is what I need to
Hmm.
provide the lifestyle that I need for my daughter and I. And then
Hmm.
also it's so many it's nothing's the same, right? It's a stressful job and
Hmm.
but I think, I do first time home buyers who are spending literally their last dime on buying a house. And then I do people who have like $10 million in the bank and they're buying like their umpteenth property. So I think it's just I learn a lot from the borrowers, actually, especially the ones who have a lot of money. It's like you're looking at their files, how they move, the moves they're making. You're like, and then you see the person who's the exact same age as you, who's like literally, you know, barely buying a house. So
Right.
sometimes it's just very different. And I like it because it's not the same thing every day. It's definitely not for the weak because it's very stressful. You have the irate loan officers. Some jobs, the loan officers can't talk to the underwriter, but other jobs, they can. So
Hmm.
you
Hmm.
deal with people who are trying to make things work, force something that just doesn't work, and you just have to be that
Gotcha.
person. Yeah. So
Right.
that's,
So
I like
So
about
you,
it.
you said something when it comes to you may have someone that's about your age and they're killing it. It's like, dang, okay, this person got 10, $20 million in the bank. Like we the same age.
Yeah,
So what's something
right.
that you learned from observing them? What are
Mhm.
some adjustments that you're like, you know what? I see what you have. I know what you do. Maybe that's something I may want to incorporate. So what are some of those things?
Sometimes, I mean, I don't know if I wanna say too much, but I look
Yeah.
at their investment strategy because a lot of them invest in stock, and I'm like, "Oh, that looks like a good stock option."
Gotcha,
So,
gotcha. Okay.
when I'm seeing they have millions of dollars, and one thing I see is that they gift their a lot of people with money, they gift their kids properties, they gift their kids funds to buy their first home. There and I'm like, I want to be that parent. I want to gift my
Yeah.
kid, her first property down payment. I want to gift her a home. So it's just like, wow, it's a
Mhm.
huge difference from people who um have money because they're
Mhm.
legit just like right and it's a tax write-off when you give somebody money,
Really?
so they're oh absolutely, yeah. And you
Gotcha.
see people, I see people making millions of dollars and they're literally owe nothing to the IRS. They actually get a tax refund because they um that's how they have people that know what they're doing that do their taxes, and it's just like a mental note like, okay, I see how you
Gotcha.
move.
Gotcha. Okay.
Yeah,
So did it
yeah.
make you also want to diversify in your investments? So I'm sure you're probably already invested in stocks, but was it a thing of,
Mhm.
okay, maybe these types of stocks, maybe I should look at some ETFs? Like what are some other
Right.
things that made you like, you know what? Okay, I was already doing this, but the way that you're doing this is different. So let me do a little something different here.
Yeah, sometimes I see like it just depends on the borrower, but sometimes people just the amount of money that they have in stock, it made me increase my life insurance policy.
Mm,
I'm like, oh, okay, because I have a great life insurance policy through my job.
mhm.
But who's to say I'm not going to be working there forever. So
Right.
I'm like, oh,
Right.
I need to increase my personal life insurance. And so
Mm,
it's just different things that I see that I'm like, we as a culture,
mhm.
have to just be more intentional about creating generational wealth. And I know that term is so like overused right now on
Yeah.
social
Yeah.
media. It's like I'm
Absolutely.
tired of hearing about it, but it's like
Right.
everybody's like generation wealth, but like seriously, if even if you don't have children, right?
Mhm.
You don't I think, and as somebody whose mother passed away, I think that just the money helps with the grievance. And so
Gotcha.
not even
Mhm.
that, like I have these properties. If I pass away, how's she gonna pay the mortgages? How is
Yeah.
she going to benefit from my death? And that's what you have to make sure of, that your kid is losing you, but the silver lining is they're getting it back,
Mm,
and
gotcha.
I think
Gotcha.
right. So I think that's what we need to be more intentional about, because it's like this, why would I pay all this money for my family to do well when I pass away? Because it's the right thing to do,
Yeah. Yeah.
for
Exactly.
you.
So now, are you doing so your personal insurance? Are you doing whole life? Are you doing term? Or are you doing a combination? Like, what does that look like?
Not term. No, I'm
Mhm.
doing whole life. My goal was to live. I don't know what I'm going to pass away.
Right. Right.
I'm hoping. And it's so funny because I was talking to a girlfriend of mine last night. I'm 44, and I'm like, I at least got another 44 years in
Right.
me.
Right.
And I'm like, maybe not. My
Right.
mom
Right.
passed away at 60, so I might only have another 16 years. So
Mm.
I don't know what life looks like for me, especially with all these, with COVID and just so many newfound sicknesses and things. So I just want to be prepared for, my demise comes way sooner than anticipated. So
Right.
whole life, I don't know much about life insurance, but for
Mhm.
me, term is not it. I mean,
Gotcha.
who's to say if you're paying all this money all these years up until 70 and you
Mhm.
live to be 80, then you just wasted, a ton of
Gotcha.
money.
Gotcha.
So
I
I
feel you.
don't I don't know. I'm not
Mhm.
really educated on life insurance, so I just want to give that disclaimer. But I
Right.
I don't have term. I have a whole life. Mhm.
Gotcha. Gotcha. Cool. So, kind of going back to the underwriting. So, there's a lot of misconception on what underwriting is and what's required. So, what would you say are some misconceptions from like the common person that's like, all right, I'm gonna apply for this mortgage. What's some advice that you would give them to prep yourself to actually be underwritten for a loan?
That's a great question. I would say the misconception is that like the underwriters are like some monsters in the background that don't want to close your loan, right?
Mm-hmm.
A lot of times, and I don't want to like place blame, but if you get a mortgage processor who's not really experienced or that may or may not know what they're doing, they are the ones communicating with the customer. So if you send them a bank statement and then they send it to the underwriter 2 weeks later, and the underwriter's like, well, I need this, this, that, then they feel like the underwriter is like attacking them. But like, I just got this information on the day of your closing. So I don't know,
mm,
So
mm,
the person, the borrower, should be in constant communication. And when people aren't experienced, they leave everything in the hands of the lender, but you need to constantly follow up. Ask for updated commitments. If you say if your commitment letter says you need A, B, and C, then you send that in and you ask for an updated commitment letter to say, I mean, has the underwriter reviewed it? I would like an updated commitment letter to be sure that it's
mm,
good. Because if you don't, you're sitting and waiting, and the day of closing, they're like, oh, your loan's not closed. We need this. That's because the processor didn't submit. They waited and they sent all your stuff to the underwriter like the day before closing. And now you have all these other things that you need to provide. So it seems like the underwriter's like this monster in the background. And a lot of
mm,
times it's simply just there's guidelines that need to be followed, and then there's very small amount of discretion that can be used. So
mm,
I would say if you're buying a house, make sure all your ducks are in a row. Don't start one thing that works my soul is like when people are just transferring money from here to there and here and Venmo. And so now like we are looking at, because people can pay bills through Venmo, all of your deposits, all of your withdrawals, everything's being scrutinized because
mm.
we need to see what's happening and like, what are you doing? What is this? Are so your bank statements get looked at, all your deposits, all your withdrawals, all the deductions on your pay stubs, your tax returns. So you just need to make sure that you're completely transparent up front so there's no surprises at the end.
Gotcha. Okay. So
Hmm.
now with this, the mortgage processor, so their job is to be the middleman between
Right,
the person that's applying and the underwriter, and just making sure that you have everything you need to make a
right.
decision. So okay. So they're more of a salesperson? Are they like the funnel of bringing in business, or is there another person that brings business to the mortgage processor?
No, so there's the loan officer, salesperson who sells the loan. So
Okay.
some loan officers want to be involved. They don't even want the processor contacting their customer.
Mm,
So there's the loan officer who they call you, they sell you on the rate, the product, the term, and then it goes to, depending on where you go, it either goes straight to the underwriter or it goes to a processor. The processor is in charge of getting everything that the underwriter is requiring. They're in charge of getting your homeowner's insurance correct, your verification of employment. They're in charge of like updating the system and get everything situated. So when it goes to the underwriter, there's some people who may say, oh, this is a single family home. And then the appraisal comes in and it's a PUD or it's a condo or it's a detached. And they said it was attached. So the processor is in charge of like correcting that,
mm.
um, making sure the mortgagee calls, just verifying your employment, and then it goes to the underwriter. So your salesperson, depending on who it is, they may or may not be very involved. Some salespeople just sell a loan and they like wash their hands until they get a check. Some are very hands-on. Some have sales assistants who are also helping with the process. So it can get a little, you
Gotcha. So
know,
what formation would you say is probably the most beneficial? Well, I have a few questions about that. So what structure do you think makes the most sense? Having the person that's selling the loan and having a processor that gets the information and is in communication with the person that's getting the loan, than an underwriter, or would you want the person that's selling the loan to be the person that's in communication with everybody?
it sort of depends because if you have an experienced processor or not, right? So if you have a lazy processor, it can make the experience with your customer be very bad. And then
Gotcha.
they talk about you. They don't care about the processor. Your name is on the line.
Right.
So it depends on what kind of loans you're doing and what level you're trying to take it to. I think the loan officers who are very high volume, who have sales assistants, are more successful than loan officers who don't have sales assistants. And also, I'm trying to find a politically correct way to say this. There's some things that we just don't need to know as underwriters. And so only sales would know that. So processor just upload a bunch of unnecessary stuff. Now you don't open up a whole can of worms. And like now we need now this whole file is just at risk. So sometimes you need to have a processor who at the processor and the loan officer and communication. There's just some things that we just don't need to know. And if you tell us, it's just going to create. But sales also has a history of being not so honest. So it's best that the processor get things because sales tries to intervene a little bit too much.
They're trying to get a sale. They're trying to get a sale, basically.
Yeah, it's a conflict of interest if the salesperson is getting the verification of employment. No, that needs to come from the processor. It needs that the salesperson and the appraiser do not communicate. So it's like you need to just have the processor because it just can become a conflict of interest if sales is too involved in a loan. Because there's things sales might know that they might not communicate, and then a processor finds out, and your loan is like done.
Gotcha. So someone that wants to become an underwriter and they're listening to you, they've done their research, and they're like, man, that seems like a career that I want to get into. What steps would you recommend? Is there a particular degree, certifications? Like what path should they take in order to do this?
I think experience. There's a lot of people who are processors that literally have no clue what they're doing, which causes a lot of chaos for the customer and a bad reputation for the loan officer. So my thing is, if you can be a good loan processor, then you can be a good underwriter. I worked my way up, but I did get a degree in finance so that I could like leverage my salary. But I think with a lot of it comes experience, and you can't just jump in being an underwriter with like no experience. Like you cost the bank a ton of money if you do not know how to underwrite, and your head will be chopped. We have scorecards, like, when you're doing DE loans, if your borrower is delinquent in the first year of the loan, that goes on your scorecard because that means you didn't analyze the risk good enough. So, I think just having a knowledge of like mortgage 101 and knowing it's a lot of different guidelines, especially if you're doing a lot of different products. You need to know the guidelines of all those products. And if you don't know it, then you need to be able to efficiently read them and be productive and quality. So it's a lot of moving parts to being an underwriter, like, especially if you're doing a more complex loans. So I would say just educate yourself and work your way up, or, if you have a degree in finance, that doesn't give you the qualifications to just go underwrite. So you just have to like know all the guidelines and apply yourself.
Gotcha. And so you're talking about scorecards, and I did not know about this. So you're saying that, so I'll put it like this. I'm used to, say, with a sale of a property, you bought the home, maybe some things happened with the home later on, some things broke down. It's like it already happened. Now it's your problem type of deal. But as a underwriter, you're saying that if they default in that first year, it's like you're still attached to this loan, even though it's already done. You already got paid for, everything's done. But it's like now they're like, okay, now let's see how good you actually are. So how long do they actually look at that loan? Is it like a year, 2 years, or is it like for the life of the loan? If we see 10 years down the line,
Yeah, not for the life of the loan. I mean, they
Mhm.
do it in I mean, some of the loans get pulled, like they're randomly audited and they're like, you didn't
Mm.
ask for this, you missed this. And sometimes you'll get hit if you miss something. Some people will close on a loan and like 6 months later, the bank is asking them for something. You sign something at closing to say that you'll cooperate. I mean, with all those documents that you sign at
Mhm.
closing, there is paperwork that says if this loan, if there's anything that comes up during this after the fact, that you will cooperate with, trying to get the loan closed. So sometimes loans aren't audited till like 6 months later, and you have to,
Mm.
going back to the customer, like, can you explain this? Can you advise? And then we have something called undisclosed debt monitoring. So people get their credit pulled and they apply for debt in the loan process. So that comes up. And it's like,
Mhm.
why are you getting new debt while you're acquiring a home? Even, I don't know how long each bank does it, but even after you close your loan, if you're still getting new debt, they get a notification, because then if
Mm.
you default, they're like, okay, well, this customer. So yeah, we if they default in the first year, FHA, then it goes on the underwriter scorecard because you didn't mitigate the risk, you didn't check enough things. So that's why we, not only are we trying to save the bank money, we're also trying to cover ourselves, because
Yeah.
it'll follow you wherever you go.
That makes absolute sense. Okay, so now it gives a more understanding as to why people may perceive underwriters as a monster, but it's a yeah, we're like if it was like if it didn't matter, then it's like all right, money for everybody. But it's like, hey, I need to make sure that you could pay this back. So I'm looking at everything that you're doing, all the your credit, your this, your that, your debt. Can you afford it? And if you're a little too close to the line, then it's like,
Yeah,
maybe there's something else you can give me to kind of push me either way. So
right.
now the question is, and I'm not sure if you could talk about this,
Hmm.
what are some things that can push you towards a yes? Like, is it more income or potential income, or like what are some things that's like, okay, if you just add this, then maybe it may push me that way.
So our job is to prove their ability to repay the loan, right?
Mhm.
So if you have a lot of risks, if you don't have great credit, you're only putting 3% down, you're using all your assets. So if there's so many risks to the bank and there's really no compensating factors, then the compensating factors and the risks need to be equal. And at first time home buying programs, it's a little bit more understandable if there's more risk and compensating factors, because they have like low income first time home buyer there's a lot of different programs for first time home buyers where the risk will definitely outweigh the compensating factors, and
Yeah.
that's where underwriters need to use their discretion. And so I would say if you're somebody who has a very high debt ratio because you have like a lot of debt and you're not really putting a lot of money down, then a compensating factor is like, oh, they have a spouse who also has income. They're not on the loan, but they have a job.
Mhm.
And you can see their deposits on the bank statements. So you know that there's additional income, but we're not using it to qualify, but at least we know it's there. Something like
Gotcha.
that.
Gotcha.
Or if they have a part time job and they might not have a 2 year history of working a part time job, so you can't use the income because it hasn't been 2 years, or at least a year, you know that it's there, or something like that. Or if they have a ton of reserves, it's like, oh, this customer is a high risk, but they have 10 months reserves. So they have the capability, they have a little bit more leeway to pay as opposed to somebody who has no reserves at all.
Gotcha.
So
Gotcha. Okay.
it's just trying to find the compensating factors. Like, I'm approving this loan because. So you need
Mhm.
to give them a because.
Gotcha. Gotcha. So, all right.
Basically, yeah.
Now, on the opposite end of that, what's something that you're on the fence and then somebody might have brought you this piece of information? You like, oh yeah, now I can't do it because this kind of made me see like, yeah, it's too risky. So, what are some
Yeah.
examples?
Sometimes people don't disclose all information. They might have gotten a divorce and now they owe child support or they owe
Mm,
alimony and they didn't disclose that, but they might provide tax returns because they're using rental income. It's like, hey, there's a spouse on your tax return. You're unmarried now. Where's the deal? Oh, here's the divorce decree. Now you owe alimony and child support. So things like that, things
mhm,
where people don't disclose because they do these credit repair programs, which I'm totally opposed to, but that's another subject. They
mhm.
do credit repair and they get their bankruptcies and foreclosures removed off their credit, but we have most lenders who are reputable have a fraud detection in the background. So if you don't disclose your foreclosure, your bankruptcy, it will come up before your loan closes. And so
Mm.
then it's like, oh, you had a bankruptcy a couple years ago. Now I need an explanation on why you had this bankruptcy. And was this house this that got foreclosed on? Was that included in the bankruptcy? Because if not, we need to wait 7 years from your foreclosure date. So it's things like
Whoa.
that you like if you're not honest up front, then it's like, well, you didn't disclose that. So like now I'm gonna look at your file a little bit more thoroughly to see what else you weren't honest
Mm.
about. Now let's get transcripts to see if they're being honest about their income. So it's like you work for a family member, you need to say you work for a family member because if we find out you work for a family member and your income supposedly increased, more than 20%, then yeah, now we know you work for a family member at the 11th hour. Now we're going to need a written verification appointment. We're going to need tax returns. And so transcripts from the IRS, depending on the lender. So it's just best to be really upfront because
Mhm, mhm,
you don't know what tools the lender's using. Some lenders are oblivious to it and some aren't. And if the lender finds out these things at the last minute, you have underwriters who they'll Google and make sure, it just depends on how they're feeling about the loan, if they feel like you're not being honest. I had a loan where
gotcha.
I seen something coming out monthly and I Googled it, like, what is this? And it was an HOA fee. And I'm like, well, how are you paying an HOA fee if you don't own any property? And it turns out they had a property, they just didn't disclose it. So it's like, you just
Mm.
have to be honest because it literally can make or break your loan.
Wow.
So,
Okay. That
yeah.
that is huge. Okay. So a couple of things I learned on that is that you can have a loan under one person's name and they have a spouse. That spouse may not necessarily be on the loan, but they'll take into consideration that, okay, though we're not qualifying all of their finances, but we know that some money is also there. So with that, do you ask for like their bank statements as well, just to verify?
No,
Or okay, gotcha. So
no.
what do you do to verify that they have income?
Because that's really discretionary, and a
Got it.
lot of things. What one thing about underwriting is everybody's thought process and the way they analyze things are different.
Hmm.
So I'm not a like warm and fuzzy underwriter. I'm not asking you for everything under the sun because
Hmm.
I'm not confident in my decision. I'm asking if there's a little bit of like doubt that you're going to be able to repay this loan. I'm like asking for
Hmm.
more. But if you have a bank statement and you see deposits that don't belong to the borrower, it's just a mental note like, okay, well, they do have other income coming in because we use your gross income. So if you
Hmm.
make $100,000 a year, that's what we're using. We're not using your net. And, but you do keep in mind, like, this is their net income.
Hmm. Hmm.
So if you're a good underwriter, you're looking at like, you might make this gross, but net, this is what you're making. And you're literally barely making this payment.
Gotcha.
So,
Gotcha.
yeah, it's very different because a lot of underwrite. It's really the thought process of the person looking at your loan, but things can be escalated, things can be waived. You just if you want to push back, if you don't agree with something, you can push back and be like, I don't agree with this. I want to escalate it.
Mhm.
Sometimes they'll just waive it. It just depends. You have to educate yourself as a borrower, though, because if you're just going what the bank is saying, you could be missing out on a deal because you were passive about it.
Gotcha. Gotcha. Okay.
Mhm,
And now, and this segment, we talk about books, right? And
mhm.
I've found that as I continue to read books, because at first I was doing like the instead of 75 hard, I was doing 100 hard, and in that I had to read 10 pages a day, and
Okay.
it makes you understand that reading in itself, and this may sound super basic, but reading has taught me a lot, right? Reading these different self-help books, like the Rich Dad Poor Dads, the different mindset and self-help books, even though they're taken in like 10 pages at a time, it really does change my outlook. It changes certain actions, things of that nature. So what are 3 books that you would recommend someone read, whether it's for mindset, underwriting, whatever it is? So what are books you would recommend?
I would say these are the books that I really thoroughly enjoyed. And one of them is what's the name Billy suggested, which I love, was so one is the Slight Edge. I love that book. Atomic Habits, which is amazing. So I read books like that because habits and consistency and discipline is the areas where I struggle. So Atomic Habits was amazing. I actually need to read it again. The Slight Edge was amazing. And also just UOU from ET is a great book. And Rich Dad Poor Dad, I have that book. I've read a couple chapters and I know everyone's saying it's an amazing book. I guess I need to just push myself to finish it. I haven't finished that book yet, but I will. And so they're the ones for like mindset that I think having healthy habits is definitely a huge ticket to success. Like healthy habits, you know. So
now I'll tell you, so Omar, and for those listening, it's somebody that's in our accountability group. He's been telling me about Atomic Habits. It's been over a year since he told me to read it. And so finally, it was one of the books that I ordered. So because of the 100 Hard, I read the book. And I was like, man, I should have read this way sooner. Like that
it's
book
a great
is
book.
Amazing. Oh my gosh. Like,
it is amazing.
Yeah.
Have you read The Slight Edge?
Like about it? I did not. I have the book, but I haven't read it yet.
Okay. Yeah, I think for me, habit forming, habit stacking, and just being consistent has been, because my life is very unpredictable with Bianca and her frivolous schedule. And I'm saying her name because you know her, but for the people listening, that's my daughter. And so because of that, I don't have a stack because my life is just very spontaneous. But I need to prioritize certain things and just learn to stack habits and be consistent and disciplined. Like it's so important. And that's what I struggle with on our accountability call. I'm doing so much better at it now. So, and just you guys being on that call and seeing your daily habits and all the things you were doing was so encouraging. So, and I encourage anybody to get an accountability group like we did, because I feel like that was a really pivotal point for me, considering what I was going through at the time.
Absolutely. Yeah. And that's something I've been considering doing it again. But we're getting up early though, man. Like we're because it started off.
I'm an early bird.
I mean, I'm not. So it was tough. Like we were getting up. The call would start at 5:00 my time, and so to be ready at 5, I have to like kind of drag myself out of bed at 4 and just kind of be a zombie for a while, and then by the time we start, got to be on the treadmill. And it was called treadmill talk because we would be on the treadmill as we were doing it, and it was just it was tough, but I would definitely say it allowed me to hear people's perspective on whenever we had issues. It was like, oh, okay, yeah, this makes sense. Okay, now, okay, that's a better approach to do it. And sometimes when you make excuses for stuff, you had different personalities on there to where it's like, stop, no, you're not doing that. This is the way. So So I'm thinking, so we may do it again, maybe
I think you
once
should.
a week.
I think you should. Maybe even once a week, because we were doing it every day for what, like a year?
Yeah.
That was insane. And I'm an early bird. I mean, I go to the gym at 5:00 in the morning, 3 to 4 times a week. So I get up early, I feel like I'm most efficient in the morning. But I would love to do that again. Like I
Yeah.
fell off of the call because I just had so much going on at the time. It was like I
Mhm.
don't really have any short-term goals. I was just trying to get, unload those properties in Cleveland. Thank God I did
Right,
that.
right.
So once I did that, I was
Wait, it
like,
was
what's
more than one? I
next?
thought it was just one.
Two, but the one was
Okay, okay,
fully
okay.
rehabs.
Gotcha,
Yeah.
gotcha, gotcha,
Oh,
gotcha. Okay,
please.
gotcha,
Yeah.
gotcha. Man, those
hmm
Cleveland stories. We'll, we'll go ahead.
Please.
We'll
I don't
give
even, when
that.
I hear the word Cleveland, it's just, I'm like triggered. I don't even want to don't even.
Oh my gosh. All right.
uh,
What is it like? Okay, so lightning round. Lightning round. All right.
okay.
So with this, gonna ask you 3 questions. And sometimes they're a little serious, sometimes they're a little goofy, sometimes they're real estate related. But with these,
Okay.
these are not, they're too goofy. It's more so of you expressing yourself and people getting to know you a little bit more. Right. So
Okay.
if you could live in any country and have no access to social media or TV for 6 months, and it can't be the US, what country would it be?
That's a good question. I would have to say somewhere in the Caribbeans or somewhere
Mhm.
in Africa.
Okay. So you got to pick a country.
Because
You got to pick one.
okay, let me think. Oh my gosh, that is so hard. One country.
Mhm.
Um, oh my gosh. Maybe Ghana.
Ghana. Okay. Okay. Gotcha. So why Ghana?
Because okay, so I did the ancestry test and it says that I'm Nigerian. And I love I want to be so cultured, it's like
Mhm.
ridiculous. But I've seen
Oh my
Ghana.
God.
Like, I'm not cultured. Like, I'm
Mm,
African American. I haven't been to Africa yet. I've been a lot of
mm,
places. I haven't been to Africa, and I would just love to be there and like
mm.
experience the culture, eat the food, like see all the sights because Africa is beautiful. Like the
Yeah.
images that
Yeah.
are online. So any country in Africa, but I'm saying
Mm,
Ghana because I've seen Ghana, I've seen Cape Town, I've
mhm,
seen Kenya,
mhm, mhm.
the beaches there. I just want to go. I just want to experience it,
Gotcha. Gotcha. I feel you. So
yeah.
next, actually, this year we're planning on going to Nigeria because, of course, Whitney's Nigerian, and
Is
so
she?
yeah, you knew
No,
this.
I knew
You
you.
knew
I
that.
knew.
Oh no, no, you
No, I
didn't
knew
know.
you
I guess
guys.
when will
I
we
knew
have
you
said it?
had an African wedding, but I didn't know who
Hmm.
was African or like I didn't want to ask, but I
Got
didn't. I know, and I
so
see
she's
you with your
Nigerian
garbs
and
on.
I'm Haitian.
Sure. I thought it was the other way
There you go.
around. I
No, no,
thought you
no,
were
yeah,
African and she was
no,
like Caribbean. Oh,
yeah.
that's so
There you
cool.
go. See, well, I guess we should have shared more of the. We were just talking about goals.
Jealous. I know.
Yeah. So yeah.
I
So
wanna go
this
there.
year in December, we're planning on
Okay.
going, and maybe we can do like a treadmill talk type of group reunion over there. That would be awesome. We've been talking about
Be
doing meetups,
amazing.
but it's been like split meetings to
Yeah.
where it was like all the women went here, and I mean I saw Omar a couple of times because he's in my hometown. But and I saw
Mm,
Crystal. And of course, we met in Miami. But there's
mhm.
I haven't met. Oh, and Chrissy. I met Chrissy.
That's my
Uh,
girl.
yeah, yeah. And but I haven't met Deshelle. Auntie Gina. I haven't
You
met her in
haven't?
person. No, no, never met
So
her.
you didn't come when we went to Atlanta then?
Nah, nah, nah. Didn't
Oh,
go.
you should have been
Yeah,
there.
I mean it was
Oh,
girls trip,
okay.
so y'all
Yeah,
you have
true.
fun. But it's like Billy, never met Billy in person. He lives
Me either.
in I think either South or North Carolina. So that's
Mm.
so it would be great for all of us to meet in one spot. And though we've been on these calls for like years, it's like, for us to actually meet each other, it'll be a different experience. So but yeah,
I
but that
met
was the
most
first
of the
question.
women.
Mhm.
Yeah, I didn't meet Omar or Billy or a
Gotcha.
few of the women.
Well,
Yeah, we got to
we'll
do
make
that.
it happen. Yeah. So question number
Absolutely.
2.
Mhm.
If you were not an underwriter, what would you
Mhm.
be?
A stay-at-home mom. It's like, no, I'm just playing. I would be
I feel like you would love being a stay-at-home mom though. On the real.
no, I wouldn't.
No?
That's why I said it. I like no. I'm
Gotcha.
a mover and
Okay.
I'm a I'm a mover and a shaker.
Yeah.
Right now,
Yeah.
I feel like I need to be home and not working right now. So stay at home mom is where I need to be right now. But for life, no.
Gotcha.
I have too much pride, I think, and too much. But I mean, even if I had a rich husband, I would definitely be making moves. But I think if I wasn't an underwriter, I'd be like some sort of entrepreneur. Like entrepreneurship is definitely where my heart is at. I just really haven't had the guts to do it. But I would say some sort of entrepreneur and like you know, in the cut. I don't really like to be out in the open, like flossing on social media. So
Yeah.
I would just be running a business somewhere and in the background. I am a good facilitator. So like I would let somebody else just let me be in the background managing everything and I'd be good.
Gotcha. Good deal. All right.
Yeah.
And so you said just an entrepreneur. So what of anything or just some, like what specifically, like what type of business specifically would you want to do?
I mean, something in real estate. I'd probably
Okay.
be doing just invest in real estate full time or
Gotcha.
doing like you know, coaching people on like the real estate, but I wouldn't be working for anybody. That's what I do now. Yeah.
Gotcha. I feel you. All right.
Yeah.
And last question.
Mhm.
All right. If my handwriting is terrible. Hold on. All right. If you could here we go. If you could have any animal as a pet, right? And not your current dog. Do you have a dog? I thought you had a dog, right?
I have a dog and a cat. My
A dog
cat
and a
is
cat.
18.
Okay. Gotcha. Oh, wow. Goodness. So if you
Yeah.
could have any animal as a pet and it can't be your current animals and there would be no danger of you being hurt by this animal and this animal would not hurt other people, what animal would you pick and why?
A horse.
A horse. Okay. Gotcha. Okay. And why a horse?
I love horses. They're just so beautiful and just that is a beautiful creature. I will ride it and just take good care of it if I could live on a
Gotcha.
farm. I don't know how I would want to live on a farm, but I would love to have a beautiful pet horse.
Gotcha. Okay. All right. Good deal. Well, that's all the questions I had for you. And thank you so much for doing this podcast. This was amazing.
Thanks for having me.
Yeah, for sure. I learned a lot. So for the folks that want to follow you on social media or get in contact with you, what?
My social media has nothing about underwriting on it. So
okay. Gotcha. But yeah, somebody want to show you some love. If somebody want to say, hey, it was great. Yeah. So where could they show some love at?
So my Instagram is miss.ms.brownie1.
Okay.
So that's where they can find me on Instagram. I'm not really on my Facebook is private, but like hopefully at some point I'll start, you know, posting content to educate people and encourage people. That's what I would love to do. Like I have a lot of knowledge and I know that a lot of people are inspired and encouraged by me, like in my personal life. So I just need to learn how to create the content and put it out there and not be so like shy.
Gotcha. Now this kind of goes back to the accountability call. Now we need to pick a date on when you're going to start posting this information online.
So by the time you post this podcast, hopefully I will have some content up because I actually just paid for a content creation class. Bianca knows it, but she's too busy. You know, she barely posts on her business page because she's too busy. So I intend to. That's why I would love the accountability group again. Like Chrissy and I talked last night. We talked for almost 6 hours.
Oh my gosh!
We had a talk for last night.
Jeez.
And we talked about content creation. We talked about real estate. Like that's what I need in my life. Like just some like-minded people that can push me. So I'm looking forward to it. So you know, I might hit you up because I want to. I don't want to do a podcast, but I want to start a YouTube channel.
So okay, well we'll do that. But as far as that Instagram post that you're saying by the time this comes out, so are we saying 2 weeks from now? Are we saying 1 week from now? Like how many days between right now and that post is uploaded? And then that way, you know, we could hold you accountable and you could put it in a group, be like, hey, I want to be held accountable for posting a post about underwriting processes or whatever. So just like thinking to yourself right now, how many days between now and then? Because realistically, as soon as we're done here, you could just take out your phone and just do it. Right. But I understand you want to think about it. So how many days?
Because I have to create something that's worth reading. I would say give me a week.
So wait, worth reading? I thought you were going to just do a video.
Oh, to talk on a video on my page?
Yeah.
Oh, I thought you meant like post, like create a Canva and like type this long paragraph. Oh, you want me to talk?
Not at all. Just talk. Just what you've been doing this whole time. Just talking about what you know. So because it's just
that easy.
Today.
I mean, I could do that. I could hang up and do that. I mean, okay. But still give me a week because I have to like look at it and edit it.
Okay, so what 1 week from today?
Yeah, because I have a really, really busy next couple days. And
cool.
this starting Sunday after church, I'll be good. And then I can I just want to edit it and make sure it's good, And so, but yeah, thank you for the encouragement. I'm going to do it.
1 week, 1 week. All right, awesome. Hey, thank you so much. I appreciate it.
Thank you, Eli, for having me. I'm looking forward to seeing it. All right, see ya.
All right, see ya.
Thank you for listening to the Your First Steps podcast. Let us know what you thought about this episode by leaving a review. And don't forget to subscribe.